How's it going, everybody? KCG Trades here, back with another video. It has been a while since I've made my last stock market outlook and weekly watch list video, as I have been enjoying the last few weeks of summer, but I'm back now, ready to get back to work, and let's dive right into the markets. So starting with the overall indexes, we had a pretty big sell-off to end the week. If we start with the Nasdaq composite, we take a look here. It has been just going sideways, not doing much for the past 2 weeks, and then last week it got pretty volatile. Heavy volume came in, and we saw a big sell-off, and a pretty big one on Friday, selling off below the 10 EMA on strong volume, closing right on top of the 21 EMA. And if we take a look at the S&P 500, same action going on, but we actually closed below the 21 EMA, so the Nasdaq is actually outperforming the S&P right now. This is pretty concerning, as we broke the 21 EMA on strong volume, closing in between the 21 and 50-day moving average. And if we take a look at the Dow Jones, this one is actually the worst out of the three, as we closed below the 50-day moving average on very strong volume, and it is pretty much in no man's land now, as it's below the 50-day moving average on top of the 200-day, but there's a huge gap in between here. So we got to see how it's going to move, how it's going to act in the next few days, next few weeks, to see if this is going to be just a short-term correction or turn into a medium-term correction. I don't personally believe it will be a bigger correction. I don't believe this will turn into a bear market, and I actually believe we are closer to the bottom than we are to any more damage in the near future. I could definitely be wrong, but based on everything I'm seeing and based on what I'm going to show you guys, I do believe we are near the bottom. So hopefully we'll get a bounce going into next week. So those are the three main indexes, but as you know, I like to look at other things. So if we take a look at the IBD 50, strong past 2-3 weeks here, broke out of this $46-47 resistance zone, strong volume, bursted up, and we just had a huge rally. And the past 4 days, obviously, you know, some consolidation, some digestion, some sell-off is normal. So we did see that the past 4 days. It's still on top of the 10 EMA, so maybe if we could get some more sideways actions just to digest the huge gains that it just recently had, let the 10 EMA, 21 EMA catch up to price without selling off too much, that would be very beneficial for growth stocks in the IBD 50. If you take a look at the IWO, which is the Russell 2000 Growth ETF, we are still in this little chop zone. Small caps did get some love in the past few weeks, but we are starting to see some sort of chop zone again. We had a huge bounce from 283 all the way to 313, and then last week was pretty rough, as we just sold off the whole week, going from 313, closing near the lows of 300. And all the moving averages are very close together right now. We did close below the 10 and 21 EMAs. So let's see how it acts. I want to see possibly a nice bounce from here. This would be a perfect area to bounce as well. If we could bounce from here and then retest these highs of 315, that would be very strong for small caps. If you take a look at the IWM, same situation here. We bounced off the lower end of support, and then we had a huge rip, and then past week we just fell through, closed below the 10 and 21 EMAs, closed right dead on the 50-day moving average. So another perfect spot to possibly bounce here after its huge run. If we could bounce from here and then break the high of 228, 229, and get to 234 resistance, see what happens over there and break through that. That would be obviously the most ideal situation. Lastly, if we take a look at the VIX, a huge spike up in volatility, closing above the 200-day moving average, which is good because obviously we get these huge spikes when we're close to the bottom. As I mentioned in previous videos, we got huge spikes here, huge spikes here, huge spikes here, which was close to the bottom. So if we get a huge spike, maybe we get another big sell-off starting Monday, just to shake everyone out, just to get more fear in the market, get a possible huge shakeout, and then turn up higher and then continue higher, as we like to see. But who knows, this could continue higher. Risk first, we don't want to jump the gun and buy the dip before there's any signs of a reversal. So we want to be patient for now. But as of right now, I do believe that we are closer to the bottom than we are to any further damage, like I mentioned earlier. With that being said, I also want to take a look at the fear and greed index. Right now we are at level 34, which indicates fear. So there is more room to go to extreme fear, which is why I mentioned we could possibly see a big shakeout on Monday, or maybe Monday, Tuesday, before heading back higher. If we take a look at the put and call ratio, we see we are operating at a fear level as well. Market volatility, extreme fear, which is the VIX that I just mentioned, and the breadth is also at extreme fear. So we are very close to extreme fear levels. Everything, all the indicators are in the fear levels. So we could be very close to the bottom. So stay ready, stay optimistic. Obviously anything can happen and we could definitely sell off even more. But as we've seen from before, the market can go up just as fast. So if you're not ready, you could definitely miss out on a pretty big move. In terms of watch lists, we want to keep an eye on the stocks that resisted selling off. We want to keep an eye on stocks showing the highest relative strength, so that when the market does get ready to turn up again, those stocks are usually going to be the first ones to continue their advancement and have the highest amount of advancing due to the fact of how strong they were while the market was selling off. So those are the stocks I'm really focusing on this week. I have about 10-11 names on my watch list, and let's start off by looking at Airbnb. So Airbnb has been acting very well since its August 24th ignition candle on strong volume. If you take a look, it was 22 million shares traded that day. Did pull back and found support after 10 EMA and just rode it higher until we broke above this 161, 162 resistance level. Did so on very strong volume as well. And on Friday, we did sell off, but that was due to the overall market selling off. And we did have a sell-off on lower volume, so that's good to see. Essentially, what I'm looking for this stock is to buy on pullbacks. So if we could get a possible pullback to the 161, 162 level and bounce off these levels while the EMAs catch up to price, that's what I'd essentially be looking for. In this market, it is hard to buy breakouts. It is hard to buy extended stocks, and pullback buys have been the best for me specifically. So that's really what I'm watching for with Airbnb. If we could get a small pullback to the retest levels while the overall market maybe sells off even more, that would be a perfect opportunity to enter, and that's really what I'm watching for. So the next stock I'm watching is AFRM. So AFRM is definitely one to watch as the next monster stock, as we see two huge gap ups on tremendous volume showing institution accumulation. The first gap up was due to the partnership with Amazon, and the second gap up was due to its earnings announcement. So the fact that it's been so strong holding these gap ups, found support at the 10 EMA, and then had a huge gap up, closed near the highs of the day, shows that institutions are really piling into the stock and are getting ready for the next leg up and getting ready to invest in this stock for the long term. Definitely gets my eyes wide open. And definitely something to keep an eye on. It is a bit extended after two big gap ups, so this wouldn't be the time to actually buy it. We would need some time to consolidate a bit, let the EMAs catch up to price a little bit more. So I wouldn't be surprised to see maybe a few days of consolidation, maybe a 2-3 days consolidation, just get some sideways action, come right here like that, and then just burst higher in the coming days, coming weeks. That would be the most ideal situation. We don't want to get too overextended where we're more susceptible to a big pullback. So if it could consolidate, can digest its gains, maybe exactly what happened the past few weeks when the first gap up happened, you see it consolidated, bounced off the 10 EMA and just continued higher. That would be ideal as well. So we have to keep an eye on this because this is definitely a monster stock in the making, hopefully, especially with this huge accumulation volume. So make sure to keep an eye on this stock, as this could definitely be the next big winner. With that being said, the next stock I'm watching is Celsius Holdings, CELH. So CELH has been a stock that's been acting very well as of late, showing great signs of relative strength. If we take a look on Friday, it did close at all-time highs while the overall market sold off. So this is definitely a stock to pay attention to keep an eye on, as it shows us that this definitely wants to continue going higher no matter what the overall market is doing. And as I mentioned, I'm not a fan of buying extensions or buying breakouts right now because of the overall market and how it's acting in terms of breakouts. They're more prone to failure. I like to buy low volume pullbacks. Pullbacks to the EMAs. That definitely gives me a good risk to reward ratio, as easily defines my risk as well. So in terms of CELH, I'm not buying anything as of yet. I do believe this will continue going higher and possibly hit 100 very soon, but for me, I want to wait for a possible pullback to the 10 EMA or a low volume pullback that retests this 82, 83 level, that retests that breakout level, and then continue higher. If we get any of those two, I'll definitely be interested, but as of now, I'm just waiting, seeing where it takes us, and waiting for the right opportunity for me. So the next stock I'm watching is DoorDash. So every week of my weekly watch list videos, DoorDash seems to make the cut, and for good reason. Since May lows of 110, it has almost doubled, hitting 214 as a high on Friday, and it's just been acting very well ever since. The volume patterns, the volume accumulation has been very strong, with the green days being very significant compared to the red days. This stock is definitely being accumulated by institutions, and just recently it broke out of this nice little 195 resistance level, broke out on strong volume, and just continued higher for the past 4 days. While the overall market sold off heavily, this barely sold off. It didn't close near the highs of the day, but it didn't go red, and it stayed green for the day, and it did close still at the highest level it's closed since over 7-8 months since February. So this is definitely getting very close to all-time highs. There's definitely not as much overhead resistance anymore compared to before, and it's slowly breaking through. So definitely one to watch, to pay attention to. It is a bit extended from this breakout level of 195 and the 10 EMA, so I wouldn't be surprised to see some 2-3 days of consolidation, maybe even a pullback to the 10 EMA. That's where I'll be looking to enter. I am positioned in the stock currently, as I did buy around these levels at that 10 EMA on September 3rd. Has been acting very well as of late, so I want to see if I could get a larger move, if we could have a nice controlled pullback to the 10 EMA, or just a nice controlled sideways consolidation before heading higher. I'll also be looking to add to my position if we do get some sort of action like that, but as of now, Dash is definitely one to watch for the near future, as it's showing great signs of accumulation, relative strength, and just overall strength in the market. So that's one to watch for sure. The next stock I'm watching is DDOG. So I definitely thought DDOG was ready to go, as on Wednesday we broke out on strong volume, broke out above this 138, 139 resistance level, and on Thursday we continued higher, but due to the overall market weakness, this fell to it as well. Friday we had a huge sell-off, but the good news is the sell-off was on lower volume than usual. We did find support at the 10 EMA, closed right at the 10 EMA, and we are still above this nice little trend line here. So if we could continue to hold this trend line, this could possibly be a low risk, high reward potential entry here, but we obviously don't want to jump the gun. But this is definitely one to pay attention to, see how the overall market acts. If the market could get a bounce and DDOG can follow suit, this could definitely hit all-time highs very quickly, as we are in all-time highs right now. Obviously not exactly all-time highs, but we are in all-time highs for the stock. We don't have any overhead resistance besides whoever's holding it from 140 to 143. So definitely one to pay attention to if we could continue higher, as this is definitely showing us signs of huge accumulation after its power earnings gap up. We found support after 10 EMA, just riding it nicely, and if we take a look at the volume accumulation, volume patterns, showing us these green days are much higher than any of these sell-off red days. So definitely one to pay attention to for a possible entry if the market can continue higher and bounce from here. So that's pretty much what I'm watching for with DDOG. The next stock I'm watching is Cloudflare. So Cloudflare has been acting very strong since May, and for the past 3 days it has been pulling back, but it has been doing so on lower volume as well as in a controlled fashion. As we see, we bounced off the 10 EMA and we are still above the 10 EMA, so that's exactly what you want to see in a pullback with a stock. Lower volume, very controlled, and that's exactly what's happening with Cloudflare. If the market continues to sell off, I want to see this retest this breakout level of 125, 126. If we could get a quick undercut and then rally back above, I'll be looking to go long in the stock. As I continuously mention that I like to buy pullbacks and low volume controlled pullbacks. That's exactly what we're seeing with Cloudflare. So if we could get a quick undercut of this 126, 125 level, and then can quickly rise back above it, I'll be looking to go long. Very simple. That's really what I'm watching for with NET. This is definitely a big winner of 2021, especially in the second half of 2021, and we'll see if it can continue this momentum going towards the end of the year. So the next stock I'm watching is Netflix. So Netflix has absolutely ripped it since mid-August. If we see here, since August 19th, going from 522 all the way to 615. Now it's just pulling back and has been pulling back on lower volume. If we take a look at that one day, it pulled back. It was low volume. Friday, with the overall market selling off, this did still have a green day and it had really strong volume. If we take a look at the volume accumulation, especially since August 13th, only 2 red days, and every green day has been huge and red days have been very minuscule. So this is definitely one to watch. Netflix showing us signs of huge accumulation once again, and it did just recently break out of this huge 1 year and few months base, broke out on strong volume as well. So let's see if we can continue this. As we know with previous stocks, the bigger the base, the bigger the breakout. So this move could definitely just be beginning. I'm definitely waiting for a pullback to possibly the 10 EMA, or maybe even retesting these levels of 577, and I'll certainly be getting into this stock, because anything that goes up this much, this quickly, and this strongly with very minuscule pullback shows accumulation is definitely happening. So this is definitely one to watch with Netflix. Wait for the opportunity to come to you. A pullback will definitely happen in the near future. Wait for some consolidation, some volatility contraction, some low volume pullbacks, and see if you could get in from there. And that's exactly what I'm going to be doing. So that's what I'm watching for with Netflix, and the next stock I'm watching is NVDA. So NVDA is another big cap name that's been acting very well and showing great signs of relative strength. Since the May lows, it's just been absolutely ripping. And if we take a look here, as the market has been selling off the past week, NVIDIA has done so in a very controlled manner, low volume, and it's been finding support off the 10 EMA. So if it could continue to find support off the 10 EMA, I'll be looking to go long against the 10 EMA. As long as the market can show signs of some strength and bounce back from here, I want to see if we could find support off the 10 EMA once again, try to go long around these levels just so I could have a very controlled risk and see if we could break above this downtrend line, this bull flag here of this 227, 228 level. If we can do so, I definitely believe NVIDIA can go into all-time highs, because of how strong it's been acting the past few weeks, past few months, and the fact it's basically been resisting any decline that's been going on, especially with the overall decline in the market. I definitely see NVIDIA continuing higher and eventually hitting 250, 260, and continue moving higher for the rest of the year. So that's really what I'm watching for with NVIDIA, and the next stock I'm watching is Roblox. So Roblox has been very choppy as of late, but the past 2 trading sessions has given me hope that this wants to continue going higher. If we take a look at the past 2 trading sessions volume, Thursday was on 10.88 million and Friday was on 17.27 million. While the overall market sold off, this had another green day, showing us signs of relative strength. We did find some resistance around the 90.50 level, 91 level, which has been resistance for a few months. So essentially what I'm looking for is a break above that $91 level on strong volume. If we do so, this could definitely continue higher and go back to those $100 levels. But for now, we just have to wait until it gets above that 91 level, because everything inside it is just chop zone. So it might have a few more days of consolidation, might even pull back, and I'll stay away from it. As soon as it gets above that 91 level, that's really when I'll be interested in it. Doesn't mean I'm going to buy it right away, but I'll see how the action plays out. But this is definitely one to pay attention to because of that strong 2-day volume, Thursday and Friday, one to definitely pay attention to. And with that being said, the next stock I'm watching is Snapchat. So Snapchat looks absolutely ready to go. If we take a look here, it's currently bull flagging nicely above the 10 and 21 EMA. And it had this nice power earnings gap up, and since then it's just been consolidating nicely, staying above the 50-day moving average, which is nice. This has been choppy as it has tried to break out a few times, but then just breaking down the next day, which has been a bit frustrating. But the fact that it is still above the 21 EMA and finding support off it is showing great signs that it's getting ready. It has been getting very tight as of late, and on Friday, like we mentioned, the overall market did sell off, but this did so in a controlled manner as well, and it wasn't on strong volume at all. So essentially we just need to wait until we get above this downtrend line here. Essentially want to get above this 75, 76 level, and then hopefully we get to rip, because it does look ready to go. It's setting up for a huge move, so just pay attention to it and be ready for it, and don't be surprised when it happens, because any day now it could really pop. So definitely one to pay attention to in Snapchat. And the last stock I'm watching for the week is ZIM, Z-I-M. So ZIM is a shipping name that's been acting very well as of late. It just recently broke out of this $50 resistance level and went up 20% to the $60 range. So after 20%, we can expect some sort of profit taking. So I wouldn't be surprised to see a pullback here. What I always want to see is, like I've been mentioning, a pullback that's controlled, a pullback to the 10 EMA on low volume. Any low volume pullback that's controlled, I would be interested in getting in. So for now, ZIM is just a wait for me. I want to see how it pulls back, if it does, or it can just continue to go sideways. Anything to let the EMAs catch up to price, that's when I'll be more interested in buying the stock. But as of now, I'm just waiting. But this is definitely one to watch because of its huge relative strength compared to the market, especially breaking out like this on strong volume the past few weeks while the overall market has been very weak. Definitely signs that this definitely wants to continue going higher. So that pretty much sums up my weekly watch list and stock market outlook video for the week. I hope you guys are ready for this week. Like I mentioned, stay optimistic, stay positive, and stay ready. We never know how fast this could turn around. But besides that, if you guys haven't already, hit that like button, hit that subscribe button, share with your friends and family. Hope you guys have a wonderful week. Take care.